calm before the storm. I think that's probably the best way to describe the market right now. Getting ready for the Fed. Everybody's kind of on pins and needles, and I don't think you should interpret anything sort of new out of what you're seeing here the past couple of days price action. Just a big hurry up and let's get this Fed thing out of the way and then get on to the Treasury issuance problem. I think I had mentioned this to you a while ago. Pretty chart. So there is the outside upside weekly key reversal. It's confirmed. It is now, it's accepting higher. The irony with this one is that it actually put in also a daily key reversal there. Wow, what a signal. And it's just slowly climbing higher. This is what we'd call climbing the wall of worry right now. Nobody could believe that this thing could move up. No way, that's impossible. Well, there it goes. Probably fog and bombs, $85, probably a half decent short-term target. And also notice too that 85 happens to line up perfectly with the gap there. So really, really good analogy of how often do these gaps like to get filled in? What's the statistical percentage? How often do markets like to hit these 2.618 after putting in a W price structure there? I think it's pretty high consistency from what I've seen recently. So that's a recent signal that's just doing its thing. Did you have the cojones to step up and take the trade? Well, it's up to you and your trading plan. Of course, the high flyers, Apple. I mean, yeah, I actually hear people talking about like China, like it's just business as usual. I don't know. I mean, I thought fucking China was a train wreck, but I don't know. Maybe everything's hunky-dory again there. Regardless, if this does turn into a nice top and we got like a nice little M right here, oh boy, that would be totally awesome to hit. Here, Adam and then Eve. That would be just so cool. So I'm definitely going to keep an eye out for that. Whether I just strap on the short or whether I actually go buy a put option or a put spread. This thing's come an awfully long way. So yeah, I kind of missed the days of having Mr. Nancy around where he had to publicly disclose when his Hooten-Falutin investment firms told him to act. But you can see how far this thing has come. Like, could we not get a nice pullback down into sort of 50% levels here? Seems logical to me. Also, too, I thought it was super important. Remember, Marat mentioned this. So I thought I had to circle around and just review this. If we're following that first week study, whatever you want to use. The beginning of April was the beginning of the quarter, right in there. This is the whole quarter, and you can see discretionary communication services technology dramatically outperforming the entire market. If this is indeed the way this is, then that clearly says that we're in this part of the cycle right here. But I don't know. The first 2 weeks, I mean, usually these fund managers are pretty damn smart. So, I don't like teach you guys this just because it's sort of my opinion. I used to follow these guys religiously. The end of the first week is the 7th and the end of the first 2 weeks is the 14th. Okay, so there's the end of the first 2 weeks. This is completely disconnected. So what does this mean? And I mean, look at this huge rally over here, right? It's interesting how communication services was wrapped up in that market, but discretionary and technology dramatically underperformed, and then healthcare, utilities, and financials dramatically outperformed. That means we're like over here. So are the fund managers that wrong that they thought that we were sort of in the maybe even bear market, early recession versus full recession, and actually maybe market bottom? Are starting to come out of the other side of it. Yeah, it's a huge difference. So if the first 2 week study is correct, and the first week looks somewhat similar to this, if this is correct, then what this means is in the next 2 weeks, we got to see technology and discretion come off dramatically. And we have to see utilities, healthcare, and financials, these actually rally dramatically. So if you're one of those short-term trading kind of people, like FE and stuff like that, pay attention. Like we kind of talked to you a little there a moment ago about maybe hunting tops and things like Apple, right? Well, that's where that would be. And maybe, I don't know, but maybe things like this Tesla have just gone way too far, too fast. I mean, look at that silly chart. If that M's out, who's willing to step up and actually pull the trigger on shorting that?